everyone, and welcome back for another deep dive.
Glad to be here.
Today, we're going deep into the world of securities fraud.
Oh, yeah.
We've got research and some crazy case studies to get through.
Definitely.
Including infamous examples that you've probably heard of, like Enron
Right.
and Bernie Madoff.
For sure.
You might be surprised at how often this happens and the different forms that it takes.
It's really captivating
Yeah.
because this topic, it's not just theoretical. You know, it's about real people losing their savings, sometimes their life savings,
Yeah.
because of calculated deception.
That's scary.
Yeah.
It really highlights the darker side of the financial world.
For sure.
So before we get into the nitty-gritty, let's start with the basics.
Okay.
What exactly is securities fraud?
Well,
And what are the key elements that make it illegal?
at its core, securities fraud involves any act of deception or manipulation that is used to influence the price of a security, like a stock or a bond.
Yeah.
It's all about gaining an unfair advantage by misleading investors and profiting from their misinformed decisions.
So it's not just outright lies. It can also involve withholding crucial information that could impact an investor's decision?
Absolutely. Imagine a company discovers a major flaw in their product,
Okay.
which could severely impact sales, but they choose to hide this information from the public
Wow.
just to keep their stock price stable.
Yeah.
That is a very clear example of securities fraud.
Unsettling.
Yeah.
It feels like there are countless ways this could play out.
Oh, for sure.
Our sources outline several different types of securities fraud,
Okay.
and some of them might be more familiar than you think.
Let's start with insider trading.
Okay.
You've probably heard this term thrown around.
Yeah.
But it's essentially about exploiting confidential information for personal gain.
Okay.
It's like peeking at your opponent's cards in a poker game.
So it's not just limited to corporate executives. Anyone with access to non-public information that could impact a company's stock price could potentially engage in insider trading.
Exactly. It could be an employee, a lawyer, even a family member
Oh, wow.
who overhears sensitive information.
Yeah.
The key is that they use this information to buy or sell securities before the public has a chance to react,
Right.
giving them an unfair advantage.
Wow. So it's all about timing.
Yes, very much so.
That's incredible.
Did you know that the conviction rate for insider trading cases brought by the SEC is over 80%?
That's very high.
Yes, it's a serious offense with severe penalties.
Yeah.
But it still happens surprisingly often.
Wow, 80%. That's a really high conviction rate.
It is.
So it shows they're really taking this crime seriously.
Definitely.
What about other types of fraud?
Go ahead.
I've heard the term pump and dump thrown around,
Yeah.
and it sounds pretty shady.
It is. It's basically a hype machine gone wrong.
Okay.
Imagine a group of individuals artificially inflating the price of a worthless stock
Oh.
by spreading false rumors, positive reviews, misleading information through social media or online forums.
Okay.
This creates a buzz and entices unsuspecting investors to buy in,
Gotcha.
driving the price up even further.
So they pump up the price and then dump their shares
Right.
once it reaches a certain level, leaving everyone else with worthless stock.
Precisely. And they often target penny stocks
Okay.
or companies with little to no real value,
Right.
making it harder for investors to discern the truth.
Yeah, they're more vulnerable.
Exactly. It's a classic bait and switch tactic that preys on people's desire to get rich quickly.
It's almost like a modern-day snake oil salesman.
Yeah.
But instead of miracle cures, they're pushing worthless stocks.
Exactly.
What about Ponzi schemes?
Yes.
Everyone's heard of Bernie Madoff, but how do these schemes actually work?
Madoff's scheme was truly remarkable
It was.
in its scale and longevity, defrauding investors of billions of dollars over decades.
Yeah, it's crazy.
Essentially, a Ponzi scheme is like a financial house of cards built on a foundation of lies.
Okay.
It promises investors incredibly high returns, often much higher than market averages, with little to no risk involved.
So how do they generate these returns?
Right.
Where's the money actually coming from?
The dirty secret is that there are no real returns.
What?
The money used to pay off early investors comes from the influx of new investors,
Oh, wow.
not from legitimate profits or investments.
So it's a cycle of recruitment with new money constantly needed to keep the illusion going.
Exactly.
What happens when the recruitment slows down?
That's when the whole thing collapses.
Oh, wow.
Inevitably, there aren't enough new investors to sustain the payments.
Right.
And the scheme unravels, leaving countless victims in its wake.
That's terrible.
It is.
It's a stark reminder that if an investment opportunity sounds too good to be true,
Yeah.
it probably is.
Most likely.
It's incredible how people like Madoff can maintain these elaborate schemes for so long.
It really is.
What about something like accounting fraud?
Okay.
That seems less flashy, but it can still be devastating, right?
Absolutely. It might not have the same dramatic flair as a pump and dump scheme,
Uh-huh.
but it can be equally damaging, eroding trust in the entire financial system.
Right.
Accounting fraud involves manipulating a company's financial records
Gotcha.
to make it appear more profitable or financially stable than it actually is.
So it's like cooking the books
Exactly.
to deceive investors and inflate the company's stock price.
Right.
Okay.
It could involve overstating revenues,
Uh-huh.
underreporting expenses,
Okay.
or even creating fictitious assets.
Oh, wow.
The Enron scandal is a prime example of how accounting fraud
Right.
can have catastrophic consequences, not just for the company involved,
Yeah.
but for the entire market.
That's a good segue into our next topic, market manipulation.
Okay.
I've been hearing a lot about short squeezes lately.
Yeah.
And it seems like that could be a form of market manipulation, right?
Your spot-on market manipulation involves any action taken to artificially influence the price of a security.
Mm-hmm.
And short squeezes can definitely fall into this category. It's basically a battle between investors who are betting on a stock's price going up
Right.
and those who are betting on it going down, known as short sellers.
So how does a short squeeze work?
Okay.
It sounds like a game of tug of war with a stock's price in the middle.
Essentially, a group of investors, often coordinating through social media or online forums,
Mm-hmm.
will deliberately buy up shares of a stock that is heavily shorted,
Okay.
driving up the price.
Oh, wow.
This forces the short sellers to buy back the stock at a higher price to cover their losses,
Gotcha.
further fueling the price surge.
So it becomes a self-fulfilling prophecy, with the price increasing rapidly due to the actions of the investors themselves.
Exactly. We saw this play out dramatically with GameStop in 2021,
Right.
where a group of retail investors, largely coordinated through Reddit,
Yeah.
managed to squeeze out hedge funds that were shorting the stock,
Wow.
resulting in a massive price spike.
Okay.
It highlighted the power of social media
Yeah.
in influencing market dynamics.
It's a fascinating example of how the landscape of market manipulation is changing in the digital age.
Definitely.
It's not just about shadowy figures in back rooms anymore.
Right.
It can be a more decentralized online phenomenon.
Exactly.
And it raises important questions about the role of regulation
For sure.
and investor education in this new environment.
Definitely a topic for another part of our deep dive.
Oh, right. Yeah.
We still have more types of securities fraud to cover,
Okay.
like broker misconduct.
Okay.
This hits closer to home for many investors,
Okay.
as it involves breaches of trust by those we rely on to manage our money.
That's a good point. We've talked about the big headline-grabbing cases,
Right.
but it's important to remember that fraud can happen on a smaller scale as well,
Absolutely.
even within the seemingly safe confines of our own brokerage accounts.
Exactly. Broker misconduct can range from misleading clients about the risks involved in an investment to charging hidden fees,
Wow.
making unauthorized trades,
Right.
or even outright stealing funds.
It's a reminder that even when dealing with seemingly reputable institutions and individuals, we need to be vigilant and aware of our rights as investors.
Exactly.
But we'll delve into the details of broker misconduct
Right.
and how to protect yourself in the next part of our deep dive.
Looking forward to it.
Me too. This is
Yeah.
really interesting stuff. Welcome back.
Yeah,
In the first part of this deep dive, we explored some of the most common types of securities fraud,
we did.
from insider trading to market manipulation, and
Yeah.
even those Ponzi schemes that can feel like something out of a movie.
That's crazy.
It is.
Yeah.
But we've covered a lot of ground, and it's clear that the world of securities fraud is vast
Oh, yeah.
and constantly evolving,
Definitely.
especially in our increasingly digital age.
For sure.
And in this part, we're going to delve into how you as an individual investor can navigate this complex landscape and protect yourself in a world
Right.
where scams and schemes can lurk around every digital corner.
It's a jungle out there.
It is.
Yeah.
The digital age has revolutionized investing, granting us unprecedented access to information online platforms, a wealth of resources
Oh, yeah.
at our fingertips.
It's amazing.
It's easier than ever to research companies, track markets, and manage your portfolio from the comfort of your own home.
For sure.
But this convenience also comes with its own set of risks, doesn't it?
Absolutely. This digital revolution has also opened the door to new and increasingly sophisticated forms of securities fraud.
Oh, wow.
Scammers are leveraging technology to their advantage,
Right.
using social media to spread misinformation, creating fake websites that mimic legitimate platforms,
Mm.
and even employing artificial intelligence to craft convincing scams.
It's almost like a digital arms race, with the fraudsters constantly finding new ways to exploit technology and target unsuspecting investors.
Definitely a constant battle.
So how can we as individual investors stay ahead of these tech-savvy criminals?
Well, one of the most effective strategies is to cultivate a healthy dose of skepticism,
Okay.
especially when encountering investment opportunities online.
Right.
If something sounds too good to be true,
Yeah.
it
Yeah.
probably is.
That old adage is timeless wisdom, especially in the digital age.
Definitely.
If an investment promises unbelievably high returns with little to no risk, that should be a huge red flag.
Huge red flag.
Yeah.
Always do your own research.
Okay.
Verify information from multiple sources, and don't rely solely on online forums or social media for investment advice.
Right.
Those platforms can be breeding grounds for misinformation and manipulation.
Definitely. And be extremely cautious about clicking on links or opening attachments in unsolicited emails or messages promoting investment opportunities.
Oh yeah, those could be cleverly disguised phishing attempts,
Right.
designed to steal your personal information or gain access to your accounts.
Yeah, you really have to be careful these days.
You do.
Safeguarding your online accounts is paramount.
For sure.
Use strong, unique passwords for each of your financial accounts.
Right.
Enable two-factor authentication whenever possible.
Definitely.
And be wary of sharing sensitive information online.
Absolutely.
It's all about being proactive and taking those extra precautions to protect your financial well-being.
Definitely being proactive is key.
Knowledge is power.
It is.
And the more you know about the latest scams and trends in securities fraud, the better equipped you'll be to spot them and avoid becoming a victim.
Couldn't agree more. The SEC and other regulatory bodies have excellent websites and resources
Okay.
dedicated to educating investors about potential threats and providing guidance on how to protect yourself.
That's good to know.
They also have tip lines where you can report suspicious activity or potential fraud.
Oh, wow. So if you encounter something that seems fishy, don't hesitate to reach out.
Exactly. You could be helping to prevent others from falling victim to the same scheme.
Right. That's a good point. Speaking of resources, seeking guidance from trusted financial professionals,
Yeah?
like a certified financial planner or a reputable investment advisor, can be invaluable.
Oh, definitely. It's like having a seasoned navigator helping you steer clear of the rocky shoals of fraud.
It sounds like a wise investment in itself, having that expert guidance and support.
It is.
Now let's shift gears a bit
Okay.
and explore some of the specific trends in securities fraud that are particularly prevalent in our digital age.
Let's do it.
One area we need to be particularly cautious about is cryptocurrency-related fraud,
Right.
as cryptocurrencies have gained popularity and mainstream acceptance. They've also attracted scammers looking to exploit the hype and the relative lack of regulation in this space.
Oh, for sure.
We've seen a surge in pump and dump schemes involving obscure digital tokens, as well as outright theft from cryptocurrency exchanges.
It's happening a lot.
It can be a bit of a Wild West out there, especially for those who are new to the world of crypto.
That's a good analogy.
Uh,
It's crucial to approach cryptocurrency investments with extreme caution.
okay.
Do your research, understand the risks involved, and only invest through reputable platforms with a proven track record of security.
Right.
And be very skeptical of anyone promising guaranteed returns or pushing you to invest in a specific cryptocurrency based on insider information.
Yeah, don't fall for that.
Right.
It's easy to get caught up in the excitement and the potential for quick profits.
Yeah. FOMO is a real thing.
It is, but it's important to remember that cryptocurrencies are still a relatively new and volatile asset class.
Precisely. Another evolving trend is the use of social media
Okay.
to manipulate markets and spread misinformation.
Yeah.
Fraudsters are creating fake accounts, spreading rumors,
Right.
and artificially inflating the price of certain stocks,
Oh, wow.
often targeting companies that are already popular on social media platforms.
We've seen this happen with so-called meme stocks.
Yeah.
And even with cryptocurrencies.
Definitely, they might even pay influencers to promote dubious investment opportunities,
Really?
making it seem like legitimate advice coming from a trusted source.
It's essential to be critical of information you see on social media, especially when it comes to financial matters.
Absolutely.
Don't blindly follow the crowd or make investment decisions based on hype rumors or what your favorite influencer is promoting.
Right. Do your own research.
Right. Always verify information from multiple reputable sources and do your own due diligence.
It's like that saying, don't believe everything you read on the internet.
Yeah, but it can be tough, especially when you see others seemingly making a lot of money quickly.
Definitely.
It's easy to get caught up in the FOMO, the fear of missing out.
You're right. It's important to remember that social media often presents a curated and often unrealistic view of reality.
Right.
People tend to highlight their successes and downplay their failures, creating a distorted perception of risk and reward.
So it's about maintaining a healthy level of skepticism and remembering that there's no such thing as a guaranteed get-rich-quick scheme,
Exactly.
no matter how convincing it might seem on social media.
Critical thinking and a discerning eye are your best defenses against these types of digital manipulation.
I like that. Now, while we've been discussing the digital dangers,
Right.
it's important to remember that technology isn't just a tool for fraudsters.
That's true.
It's also a powerful weapon in the hands of regulators and law enforcement.
It is.
That's reassuring. Are there any specific examples of how technology is being used to combat securities fraud?
Absolutely. Artificial intelligence and machine learning are being used to detect patterns of suspicious activity
Okay.
and identify potential fraud in real time.
Wow.
These systems can analyze vast amounts of data, looking for anomalies or red flags that might indicate fraudulent behavior.
So it's like having a digital detective constantly monitoring the markets for suspicious activity?
Exactly.
That's impressive. Are there other technologies being used to enhance security?
Yes. Blockchain technology, the foundation of cryptocurrencies, is also being explored for its potential to enhance transparency and security in financial transactions.
Oh, interesting.
It acts as a digital ledger that can track the movement of assets and make it more difficult for fraudsters to hide their tracks.
That's fascinating. It sounds like blockchain technology could be a game changer in the fight against fraud.
It has potential.
It's encouraging to see that there are proactive efforts underway to protect investors in the digital age.
It's definitely a step in the right direction.
Yeah.
And regulatory bodies are constantly adapting their strategies,
Right.
working to stay ahead of the curve and develop new tools and regulations to combat these evolving threats.
It seems like a moving target.
It is. It's a continuous process of innovation and adaptation.
But it's reassuring to know that there are dedicated individuals and organizations working tirelessly to protect investors and maintain the integrity of the markets.
Absolutely.
Protecting yourself from securities fraud is an ongoing process.
For sure.
A marathon, not a sprint.
Exactly. It's not a one-time task,
Yeah.
but rather a continuous journey of educating yourself,
Right.
staying informed about the latest trends,
Uh-huh.
and adapting your strategies as the financial landscape evolves.
Right.
It requires diligence and a commitment to staying informed.
It's like staying healthy.
Yeah.
It requires consistent effort and attention to maintain your well-being, both physically and financially.
Exactly.
Right.
By being proactive, vigilant, and constantly learning, you can navigate the world of investing with confidence
Okay.
and minimize your risk of becoming a victim of securities fraud.
It's a powerful message of empowerment.
It is.
You're not just a passive player in the financial markets. You have agency and the ability to protect yourself through knowledge and informed decision-making.
Precisely.
Hmm.
Now, in the final part of our deep dive,
Okay.
we'll move beyond the individual investor and explore some of the broader implications of securities fraud,
All right.
examining its impact on the economy, investor confidence, and the integrity of financial markets as a whole.
I'm interested to hear about that.
We'll also delve into some thought-provoking questions about the future of investing
Yeah.
and the role of regulation in a rapidly changing world. So stay tuned for the final chapter of our deep dive.
Can't wait. Welcome back to the final part of our deep dive into securities fraud.
It's been a journey.
It really has. In the previous parts, we explored the mechanics of these schemes,
We did.
from insider trading to pump and dumps, and even the digital dangers lurking in the crypto world.
Right, a lot to unpack.
We also armed you with knowledge and practical tips to protect yourselves as investors.
Hopefully.
Yes. Now let's broaden our perspective
Okay.
and examine the far-reaching implications of securities fraud.
Right.
It's not just about individuals losing money.
Right.
It's about the erosion of trust
Yeah,
in our financial system and the potential for wider economic consequences.
definitely. It's a big deal.
It is. It's easy to get caught up in the individual stories, the charismatic fraudsters, and the eye-popping sums of money involved.
Right. It can be glamorous.
It can, but the ripple effects of securities fraud can be felt far beyond the immediate victims.
Absolutely.
Right.
When investors lose faith in the integrity of the markets, they become hesitant to invest,
Right.
which can have a chilling effect on economic growth.
That makes sense. Companies rely on investors to raise capital, expand their operations, create jobs,
Ah.
and drive innovation. When fraud undermines investor confidence, it disrupts this vital flow of funds.
Think of it like this. A healthy economy needs a vibrant and trustworthy financial system,
Okay.
much like a healthy body needs a strong circulatory system.
Okay, I'm following.
Securities fraud is like a blockage in that system, impeding the flow of capital and weakening the overall economy.
Wow, that's a powerful analogy. So what can be done to prevent these blockages, so to speak,
Yeah.
and safeguard the integrity of our financial markets?
Robust regulation is key.
Right.
Needing strong laws and enforcement mechanisms to deter fraudsters
Uh-huh.
and hold them accountable for their actions.
Right.
The watchdogs we discussed earlier, like the SEC, FINERA, and the CFTC, play a vital role in maintaining fair and transparent markets.
That's reassuring to know that there are dedicated organizations working to police the markets and protect investors.
They're doing their best.
But with the rapid pace of technological change and the increasing complexity of financial instruments, are these regulatory bodies equipped to keep up?
That's the challenge.
Oh.
Regulations need to be adaptable and forward-looking to address emerging threats.
Right.
We've seen this with the rise of cryptocurrencies, where regulatory frameworks are still evolving.
Yeah, it's a new frontier.
It is to catch up with the rapid innovation in this space.
It seems like it's a constant game of catch-up with regulators trying to stay one step ahead of the fraudsters.
It definitely feels that way sometimes.
But regulations alone might not be enough.
That's true.
We also need to foster a culture of ethics and compliance within the financial industry itself.
Absolutely. It's about promoting transparency, encouraging whistleblowers to come forward,
Okay.
and holding individuals and institutions accountable for their actions. We need to create a system where integrity is not just an abstract ideal,
Right.
but a core value that is actively cultivated and rewarded.
It's about shifting the mindset from simply avoiding getting caught to doing the right thing even when no one is watching.
Exactly. Now let's look ahead.
Okay.
What are some of the challenges and opportunities on the horizon in combating securities fraud in this increasingly digital world?
Good question.
Well, as technology continues to advance, we can expect to see even more sophisticated forms of fraud.
That's concerning.
It is artificial intelligence, for example,
Uh,
can be used to create highly convincing scams
oh, wow.
and manipulate markets in ways we haven't even imagined yet. It's a sobering thought.
It sounds like an endless arms race with the good guys constantly trying to outsmart the bad guys.
It can feel that way at times, but remember, technology is a double-edged sword.
Right.
It can be used for good as well.
Good point.
We're seeing the development of new surveillance systems, analytical tools powered by AI, and even blockchain technology being used to detect and prevent fraud more effectively.
So it's not all doom and gloom.
Definitely not.
There's hope that technology can be harnessed to enhance security and transparency in the financial markets.
Absolutely.
Yeah.
And as we become more interconnected globally, international cooperation is going to be crucial in the fight against securities fraud.
Right.
Fraudsters often operate across borders, exploiting regulatory loopholes and jurisdictional differences.
Yeah, it makes it tough to track them down.
It does. We need to work together to close those gaps.
It highlights the interconnectedness of our financial system
It does.
and the need for a coordinated global response to these challenges. Now, before we wrap up, I want to leave our listeners with a final thought-provoking question.
Okay.
Given the complexity of financial markets and the constant evolution of technology, how can we empower individuals to become more informed and discerning investors?
That's an excellent question, and it brings us back to the importance of financial literacy. We need to equip individuals with the knowledge and skills to navigate the financial world confidently and make informed decisions.
I agree. This education should start early in schools, communities, and even within families.
Yeah.
We need to demystify the world of finance and make it accessible to everyone.
I couldn't agree more.
Yeah.
We need to make financial information more understandable
Right.
and less intimidating,
Right.
cutting through the jargon and complexity that can often feel overwhelming.
Uh-huh.
The more people understand the basics of investing, the risks involved,
Right.
and how to protect themselves from fraud, the better equipped they'll be to make sound decisions.
It's about empowering individuals to take control of their financial well-being
It is.
and become active participants in the financial system.
Exactly. Because an informed and engaged citizenry is the best defense against securities fraud
For sure.
and a key ingredient for a healthy and thriving financial system.
This deep dive has been an incredible journey exploring the intricacies of securities fraud, its impact, and the ongoing efforts to combat it. We've also highlighted the crucial role of regulation, the evolving landscape of technology,
Right.
and most importantly, the power of individual knowledge and vigilance
It's so important.
in safeguarding your financial well-being.
Couldn't agree more.
A huge thank you to our expert for sharing their insights and expertise with us today.
It was my pleasure.
And to our listeners, thank you for joining us on this deep dive.
Thanks, everyone.
Until next time, stay curious, stay informed, and stay vigilant.